As promised, unusual activity time. For that, I turn to you, Pete.
Yeah, I got some fun ones for you, Scott. One of them is a little bit dicey. It's probably not for everybody, but it's Twitter. Now, this is a name that actually just sprinted not too terribly long ago to new highs, and then it pulled back, and then today, new highs again. So absolutely on fire, but they were buying the November 6th, so a week out they're going, even though earnings are coming out. They're looking out 1 week, and they're buying the November 52.5 calls. And they're pretty expensive, Scott. They're not inexpensive just because all the implied volatility that I talk about all the time is juiced up into some of these calls. So they bought about 3,000 of these calls, and they traded for about $3.40. So not inexpensive, and they're basically playing on the earnings, and that's why I'm so bullish. I actually think that this makes a lot of sense. I own these calls as well as owning the stock. Next one I got for you is Disney. Disney's pretty good because I see some good size. This is a stock that in a very short period of time has come back down from that 133 level and got itself a lot closer to about 118 right now. And so that's when we saw some call buying in there as well. They went out to December and they were buying the 120 strike calls, selling the 130 strike calls. So what does all that mean? Somebody wants to be in this stock, but they want to be able to do something very smart, in my opinion, by selling those 130 calls. They don't think it's running through that number and get a little bit of premium that way as well. I'm in that as well. I'm in the calls. I'll be in there for the next month or so.